Next up, please help me welcome Jason Jessup, CEO of Magna Mining. Magna Mining is a Canadian nickel, copper, and PGM developer focused on the Sudbury region with a mission to deliver high-grade, clean metals for the electrification economy. Please welcome Jason.
Thank you very much for that introduction. I founded the company, Magna, back in 2016, and I'm based in Sudbury. I've been living there for about 25 years, and previously I'd worked for Inco, which is one of the big mining companies there, and then went to work for a junior company called FNX Mining, who had acquired 5 past-producing Inco mines, and we were able to bring 3 of them back into production, made some very significant discoveries, and ultimately were acquired for about $1.5 billion in 2010. And shortly after that, about 2 years later, that company was acquired by KGHM. And this was really what inspired me to found Magna. I had recognized that these non-core assets to the majors in Sudbury we could unlock a lot of value by being an entrepreneurial junior company. And these mines that were so great within FNX were now, again, non-core within a major mining company. So we have went public in 2021 and made our first acquisition post going public of our Crean Hill Project. And then just this year, February 28th, we closed the acquisition of 8 properties from KGHM, including the producing McCreaty West mine, which myself and many of our team have worked at before with FNX, as well as LVAC and Podolsky mines, which we also had in production. So it's been a great ride for us over the last 8 years, and yeah, I'm really excited to tell you more about it. So throughout this presentation, there will be a number of forward-looking statements. I'd like to caution all the listeners, do your own due diligence. So since founding the company, really I've had a vision of how we were going to grow, and it is based upon 3 pillars of growth. First one, production. Now, being in production with the McCreaty West mine, we see an opportunity to continue to grow, to bring other projects we have which are permitted into production and continue to grow that production profile. The second pillar of growth is exploration, and much like the success that FNX had making some major discoveries in Sudbury, we believe there's still a lot of opportunity to make these types of discoveries on our properties. And much of our exploration team are the former FNX team and my former colleagues. So it's great to bring back that team. And then the third pillar is one that I think we have been very successful at, is acquiring non-core assets from major mining companies in Sudbury. And we have proven that we have a track record of doing smart deals, and we truly believe this is a strategy that we will continue to pursue, and we think there's great opportunity over the next 12 to 24 months to make other accretive acquisitions in the Sudbury Basin that have synergies with our existing team and projects. So this is a map of Sudbury. The Sudbury Basin was created by a meteorite impact about 1.85 billion years ago, and the mines typically sit on the edge of this crater. The city of Sudbury itself is about 180,000 people, a 4-hour drive north of Toronto. Currently dominated, I would say, they're primarily operated by Vale and Glencore, and then we are the 3rd operating company in Sudbury. Our business model is to sell ore to Vale and Glencore's mills. So we don't operate our own mill, which has a lot of benefits. It allows us to be very flexible with our production, and we simply deliver the ore to these mills and get paid for it. In black, you can see that's our McCreaty West mine. This is our producing copper mine. Next door to it is the LVAC mine. The Podolsky mine is just on the other side of the basin. And then we have our Crean Hill and Shakespeare projects. All those projects that are labeled there in blue are fully permitted, past producing mines that we believe we can bring back into production very capital efficiently. And those gray properties outside of that are earlier stage exploration properties where we also believe there's great potential. So we have a broad portfolio of projects from production through to exploration, and this really fits with our 3 pillars of growth. So with all those projects, people ask, how do you stay focused? What are you, going to accomplish? Well, it's quite simple. For this year, we are focused on the McCreaty West mine. McCreaty West is a mine that was non-core to its previous owner, had not received the kind of capital that we believe that it deserved and then the attention it needs and deserves. So we are going to focus on investing capital, increasing development at the mine, opening up new workplaces, and this is really going to create what we believe an optimal, sustainable mining operation at McCreaty West. And we believe that we can use cash flow in 2026, once we've made these optimizations, to be able to reinvest, to bootstrap LVAC, Podolsky, Crean Hill, and eventually Shakespeare, and bring those back into production. So this bootstrapped approach is very similar to my experience with FNX Mining, and we believe we have an opportunity to do that as well. This is a picture of the McCreaty West mine, a very simple operation, ramp access, our offices, our trailers. McCreaty West has been operating, it was reopened by FNX in 2003, and it's been operating continuously since then. Prior to that, it operated for about 25 years by Inco. It's produced about 22 million tons so far. So it is a long life mine that just keeps going, and it's a very shallow mine, which has a lot of benefits to it. We have released a NI 43-101 resource on it last year when we announced the acquisition. Currently that sits at about 9.3 million tons in the indicated category. Last week we had the honor of announcing our first quarterly financials. Now, be it closing the deal on February 28th, it was only for the month of March, but again, it was a huge milestone for our company, and we're very pleased to be able to say that in our first month, even with all the transition and there was management changes at the mine and I would say a slow start, we were able to turn a small profit margin of about $300,000 for the month. Again, a good start for our first month, and we also closed the quarter with $38 million in the bank. So we are well cashed up to execute our plan going forward. So this is a map of the property boundaries for McCreaty West and the adjacent LVAC mine. So McCreaty West is right here. This is the town of LVAC, and then the LVAC mine is right here. And I just want to point out this white dot right here is one of the most important buildings in the town of LVAC. That's the hockey arena where my son plays. So as I mentioned, about a 9.3 million ton indicated resource at the McCreaty West mine, and that is between three distinctly different zones. So there is the contact nickel zone, there is the PM zone, which is a footwall Brecha hosted deposit that's higher in PGMs, lower in sulfides, lower in copper. And then there's the 700 copper PGM complex. And that 700 zone, that is where we are focusing our attention, and we are primarily focused on copper at this time. So as I mentioned, the Sudbury Basin was created by a meteorite impact, and this would basically be the wall of that crater, and this is where the nickel deposits in Sudbury typically would be deposited and found. And then in behind that, in the footwall, hosted in a rock type called Sudbury Brecha, you get these footwall deposits that are typically higher in copper and higher in PGMs. So we can target certain commodities, and we believe that at some point nickel will rebound, and probably rebound quite strongly. We will be in an enviable position to take advantage of that and restart nickel mining in the inner main. In the meantime, we'll focus on copper because that's providing us the best margins. So out of that 9.3 million ton global resource at McCreaty West, there's about 5.2 million tons of it in the 700 complex at just under 2% copper and just below 1% nickel, with about 2.5 grams of precious metals. And this is the resource that we are currently working on developing a long-term mine plan and doing the development to access other areas. So what you're seeing here are in orange are our design stopes for the remainder of this year in the 700 complex, and in green is our development that we're planning on doing throughout the rest of this year and the first half of next year. What we really want to do is get the development out onto this western side. So a lot of this area was that 15 million tons that Inco mined while they were in production, but that western side of the deposit wasn't mined by Inco. They had a very high cutoff grade at that time. We believe there's still a lot of opportunity. We've done some drilling, albeit not at ideal angles, but we believe that this will become sort of the new complex of the McCreaty West mine that will allow us to have higher throughput rates, beyond what historically has been about 900 tons a day by the previous owner. And we think we can get that well over 1,000, possibly up towards 1,500. But we need to get the development in place. As you can see here, a number of levels that are laid out, and then that will allow us access to that west side. And really, once we get drilling, this west side, we believe, can have a tremendous impact on the future of the mine. We released some drilling already this year since we've acquired the property, and this is drilling that's really supporting our mine plan and helping us to better design our stopes. And what we've seen is some of this drilling is outside the currently designed stopes that we inherited when we bought the property, but show opportunity to either enhance grades, expand stopes, or at least adjust it to optimize. And some of those intersections are quite good, such as this hole here where we intersected 14.5% copper, 3.5% nickel, 6 grams over 9.6 meters. So there is some very, very high grade copper still remaining in the 700 complex. And we're definitely engaged with 2 drills turning to better define that so we can mine higher grades and higher margin ores. So then on to our LVAC mine, and LVAC is a mine that's on care and maintenance. It operated up until 2019. It has got a lot of infrastructure. It's got an active shaft. There's people going underground every day. We have a small team that's doing care and maintenance on the mine. But our goal this year is to build a restart plan to restart LVAC, and we're currently drilling on the property to support that. So again, LVAC and McCreaty are connected underground on the 1,600-foot level, and LVAC acts as the secondary egress for the McCreaty West mine. Much like McCreaty West, it has both a contact deposit as well as a Brecha-hosted footwall deposit. We have a historic resource currently that was done by the previous owner, and we're in the process of updating that resource, and we will plan to have that out by the end of Q3. But based on the historic resource, there's about 5 million tons of contact nickel at 2% nickel, 1% copper, as well as a significant footwall component that is more copper dominated. So the footwall deposit that was mined up until 2019 is called the Morrison Deposit. It was an FNX discovery, very high-grade copper. I brought that deposit into production with FNX. We mined 8 to 10% copper, 8 to 10 grams precious metals, and about 1.5% nickel quarter after quarter while we were operating, so very high-grade potential. But our restart plan will not be looking at going after what's remaining in the Morrison Deposit. We're going to be looking to develop a plan that's much closer to surface. And our recent drilling that we've announced is supporting that plan. We've announced a few intersections that we've drilled that are within 200 meters of surface, where we intersected narrow intersections up to about 1.8 meters, but 24 to 25% copper. So very chalcopyrite-rich veins, and these are typical of what we see in Sudbury footwall deposits, and very typical to what we mined in the Morrison Deposit. So our goal right now is to expand this mineralization closer to surface in what we call the keel zone, so that we can incorporate that into a mine restart plan, along with the remaining resources that are already there. Now, quite quickly, we recognize that these footwall deposits that can be very, very high grade in copper and precious metals are hosted within a rock type called Sudbury Brecha. And what we're showing here in these yellow shapes is that Sudbury Brecha plain. And we've mapped that out, and now that we understand it better, we can start targeting areas that we think have high potential for additional high-grade copper footwall mineralization. And that's what we started to see, and this is where we're following up. So those high-grade hits up in the keel zone, they're on this Brecha train. It also, in this Brecha area, hosts the Morrison Deposit. But in between, there's been very little exploration. A few holes FNX did intersect, had some high-grade copper. We're going to follow up on those. There's a large fault that offsets the deposit, and I see I'm running out of time, so I'm going to jump ahead, but a lot of exploration potential in the footwall and between McCreaty West and LVAC. $38 million in the bank, great support of shareholders led by Dundee Corp. Stocks performed well, and we're really excited to continue ramping up production and exploration throughout the course of this year. Thank you very much.